Welcome into this carrier update. Donnie, Isaiah got a little shot on you there.
Yeah, I think you did. Took a shower this morning. All right, so back to where we were, retail versus wholesale and diesel price. So we talked about this before about how the retail prices are not going to come down until the stations feel that it's more stable than the ups and downs that we've seen in the rack price for diesel fuel. We're starting to see the prices come down now. Well, they feel relatively stable, but look at the spread. So this chart right here is the difference between the DTS and the wholesale ultra-low sulfur diesel rack price. Over the past week or so, you've seen that the spread has been increasing pretty much. So as the prices go down, these stations are still making a little bit more money.
Yeah.
Of course, this also helps out the large carriers as well.
That's what I was going to ask. I was going to say, I mean, we've seen it, we've talked about it for a lot of the past few months, right? These diesel prices. And I mean, you look at this and look back into Q2, right? Back in here on this left side, end of June, right around that $1.10 per gallon. Now we're at $1.60. So, I mean, we may not even see some of these large carriers when they're reporting earnings talk about the windfall that they're generating right now, but it's definitely showing up.
And so, they can actually possibly turn a profit on their fuel surcharges. Of course, all round expenses when oil goes up, they may make a little bit more money here, but they'll probably pay a lot of it back out when it comes to the maintenance on the trucks. And that's part of the problem because this controls a lot of prices and everything else, maintenance shops, roadside services, et cetera. So there's good and bad right here.
Yep.
We need to see that spread down a little bit probably, and then all the prices down, at least $1 a gallon, and that would probably give a lot of relief to everybody.
For sure.
All right, let's pop in and see what's going on in the markets here. Outbound tender rejection rate volumes and outbound tender volumes and outbound tender rejection rates. We've seen it pop back up here after the holiday. A little bit lower overall with everything than what it was pre-4th of July. And it's gone down just slightly, but we're still 12,600, above 12,600. So the volumes are still healthy here. Rejection rates have dropped on down a little bit. Now, look at your scale here. It looks like a big slide, but we know we're only going from 6.75 to 8.25. So it dropped from about 8% down to where we are now at about 7.26%. Still the wrong direction, still a very low rejection rate. We hadn't seen rejection rates like these in a very, very long time. And I expect it to kind of stay in this area right here for quite some time until contracted rates, right now contracted rates are going to continue to drop right now too. We're in that time period where a lot of new contracts are being rebid right now. And right now carriers have the upper hand on the strength, so we're going to see all that start to follow rejection rates.
Awesome. Well, thank you so much for this update, Donnie. We'll be sure to check in with you again a little later. Right now, we'll take a look at the last 24 hours in freight with our market update.
All right, Anthony, let's talk really quickly about what's coming up here at FreightWaves before we head out for our second hour break. Coming up, we are collecting nominations for our Freight Tech 100. So this is our list that we put out every year that ranks the best freight tech companies in the game, something I know that you absolutely love.
Definitely, of course. We're going to be expecting big names like P44 and a lot others, among many others as well. But I'm going to be looking forward to what some of those movers have really made some changes over the last year or so. Who went from maybe 50 into the 30s, who went from the 30s into the top 10. So it's always interesting to see.
Who went from the top 10 to the bottom 10.
That could be a thing as well.
I don't know. But nominations are open. Those will close August 26th. We'll announce winners here at the Future Freight Festival in Chattanooga on November 3rd. So go ahead and go get those nominations in if you haven't had the chance to do that yet. We're going to take another quick break. We'll be right back to open up our second hour of FreightWaves Now shortly.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Second hour presented by PowerFleet. I'm Tony Mulvey, joined by Donnie Gilbert. Donnie, going to talk about Reefer today.
Yeah, so we're jumping in here. We looked at what's going on in the overall market. Now let's kind of go back and look at reefer markets. Now, me and you talked about this a few different times about you like to compare about where we are today versus pre-4th of July holiday, pre-Memorial Day holiday. So actually back this chart up. And in reefer, after the 4th of July, of course, this is kind of the peak of the reefer season because it's kind of the peak of produce season. But we see that our volumes are 1,376, which is higher than pre-4th of July and higher than Memorial Day. So volumes right now are looking pretty strong for reefer, but our rejection rates have fallen down to 7.91%. The lowest I've seen reefer in probably over 2 years. So reefer is seeing the hurt as well as capacity loosens up. And we'll look at here maybe next time at the at capacity maps on what's going on with reefers with the head haul index, and you're really not seeing a lot of those numbers over 25. We like to see the head haul index above 25 for a period of time to really show some tightening in the markets. You have a lot of markets that are blue, but not a lot of them that are over 25, so it's really kind of a balanced market kind of across the U.S. And that's what's helping driving these prices down, along with, the oversupply drivers as well. Let's pop in here to the next chart, though. This is our ROTRI that we're currently looking at, 7.91%. But this is the 3-year history. So in the green line is in the dark blue line is where we are currently, right here in July. So we're right here right now. The green line is 2021, the light blue line is 2020, and the red line is 2019. Now, 2020 was our COVID year where we see the big boom taking off. The last time that we were down around this 7.91% was when the economy was shut down back in COVID, and that's kind of how bad the situation is right now. So you see here, typically after the 4th of July, we see the red line, 2019, dipping down. You see the green line dipping down, 2021. It is a pattern that we probably would have seen here. We see it a little bit in 2020. But this is because it's a COVID year. But look here, we kind of see some relief and hope coming up here. August, September, we see a little bit of an incline coming up right here. So watching Reefer, this is the next big hit we want to see. Is it going to turn back up midway through August or not? So we got a little bit of time here before that comes up, and we might see rates drop down. If we don't see this upswing, we know this market's in trouble as well.
Yeah, I mean, we're still talking, what, three to 4 weeks before we see any, what you would call seasonality in this, to where we see that upward pressure.
We didn't see it in June like we should have, May or June, so hopefully maybe things will change here and help put prices up around about mid-August.
Awesome. Well, thank you for this update, Donnie. We'll be sure to check in with you one more time. Right now, toss it back over to Kaylee and Anthony.